All right. Let's get this thing rolling here. Welcome to the show. Happy Saturday, everybody, or whatever day it is that you're listening to this. Happy to have you tune in. Hope this show blesses you. Hope you learn something new from it. And we'll dive on in with a word of prayer. God, we praise you for this great day. I thank you for this space. I thank you for this opportunity. I thank you for everybody that tunes in. We thank you for the growing reach. We pray that you would bring new people in to be speakers. That we can share knowledge in the kingdom of God, that we can grow with each other unilaterally, and that we can all together just work at expanding your kingdom, God. And we pray that many souls will be harvested along the way. So we praise you and thank you and ask you to guide our conversation. In your name, Jesus. Amen. So Naftali, got the invite for you to be co-host. I hope you're having a great day, brother. Pretty fun week, I guess you could say. Cryptocurrency seems to be holding pretty strong. Gold has pulled back, I think, to around the $3,200 level, which is pretty fair, still pretty strong. And I believe stocks had a pretty nice week. We had news of, I believe, a tariff pause. I'm not sure if that was this week or last week, but that significantly shook the markets in a positive manner. I think that we're seeing pretty bullish sentiment, and it's a really interesting that's a really interesting conversation there. I'm not, I personally don't know what to consider or expect or think of what's going on right now. From my perspective, it does appear that the United States is doing a lot worse than it thought it would in these tariff wars, and so I think this 90-day pause is, I don't know, nothing necessarily lines up. It makes sense. Nothing's consistent. One day they're being really hard, the next day they're putting pauses on things. So things to keep in mind. I'm not sure where we end up at, but I think what is being unveiled is that the rest of the world is working together a lot more than we probably realized, and they are making a lot of alliances and trade partners, and so we're seeing a lot of nations actually kind of get stiff to America. I think Trump was expecting the nations to kind of bow the knee, and so instead they're actually standing off and they're getting really, really defensive, and they are making trade patterns with the rest of the world and kind of just avoiding the United States. So I think that's something that for us who have been diving into the details, I think that we could have saw that coming for years ago. The United States, in my opinion, is much weaker than we anticipate. And you could go in multiple different directions with this. One thing I found particularly interesting, a lot of people try and use our military as an excuse for why we're the strongest, most powerful nation. But there's a recent poll or study that came out that said, I believe it was over 80% of American youth wouldn't qualify for the military based on their physical condition. So, on one end, you think the military is great and powerful, but then we look at the youth, and less than 1 out of 5 kids are able to serve if they needed to. So what does that really tell you? To me, it tells you that we're just bluffing, and we're pulling a really massive bluff. Trump is he's also pushing to increase military spending, $150 billion additional money, and this is coming after we did all this talk about Doge cutting jobs and positions and stuff like that. I actually I'm pretty strongly opposed to growing our military. I think the opposite needs to happen. I think that it should have been butchered. I think it should have been butchered long ago. Probably butchered in half, to be honest. We spend a lot of money overseas. We spend a lot of money patrolling other nations. We spend a lot of money that, in my opinion, we just don't need to. And so what we've done in America over the last handful of decades is we've prioritized military and military strength and power at the expense of domestic, I guess you call it innovation strength. And so whenever you drive around and look at cities that are falling apart, poverty ripping and rising, buildings that are collapsing. That's all, and infrastructure that, falling apart. If you go to Pittsburgh, there's literally some highways that you go under bridges, and like the bottom of the bridge, support system beams, whatever you call them, are literally like rusted away to the point where there's actually like holes. I mean, like I don't understand how it's even safe. I'm sure it's not safe, but it's concerning, and so our infrastructure is very dated, and the rest of the world knows that. And it's just very embarrassing. And so here we are. We're going to spend more money on military for I'm not sure what reason, but um, you know, in my opinion, if you cut that budget in half and you took $400 billion and you invested that in infrastructure every year, Americans would be significantly better off, in my opinion, because $400 billion. I would imagine that could go a very long way, upgrading infrastructure, upgrading highways, upgrading railroads, upgrading even transportation stuff. And so to me, it's very disheartening to see that on one end we're cutting spending, on the other end we're raising spending. And if you really dive into the budget, it looks like the Republicans are planning to increase the debt deficit continually again. And so it kind of puts us back in this scenario where, okay, we're at the end of the road. I think Trump was kind of the last hope. Doge was kind of the last hope. And so that is now behind us. It is, I would call it a failure. I mean, I think they did good, but considering that they couldn't get the rest of the people on board, there's no point in cutting spending if you're going to spend it somewhere else. And so, yeah, that's kind of my perspective. Once again, nothing on this show is to be taken as financial advice. This is not financial advice, but so that's kind of what happened this week. Stocks did pretty good. So once again, this goes back to the overall idea of why you should, or why we own Bitcoin, I should say. As the government prints more money, as the government goes further into debt, to service those debts, they have to print even more money. It's an exponential, never-ending train. As the government prints more money, your dollars that you have become less valuable. Hence why, 5 years ago, you could go to Burger King and buy a bacon cheeseburger for $1, and today that same sandwich is like $3. And it's the same thing at McDonald's. The dollar menus disappeared. Now, their cheap sandwiches are $3. Their Big Macs are $6 or $7, and they're about a fourth the size that they used to be, and the quality's dropped significantly. So, all this is just an effect of the government printing more money to service debts. And the problem with this is when they do this, it actually makes the wealthy people richer because, once again, if you own stocks, if you own real estate, if you own Bitcoin, as you saw in this whole debacle with the trade war, as the United States kind of bends the knee of the rest of the world, in my opinion, and we walk away from this trade war with not too much won. I mean, we'll probably be better off than we were. Money pours back into stocks, and the people who own a lot of stocks get wealthier and richer. And all that money kind of gets siphoned out of the average person's pocket. So, nonetheless, it's been an interesting week. So if you own stocks, you probably did pretty good. I own a little bit of Tesla. I sold a little bit of Tesla yesterday, around 350. It was on like a 40-50% rip from its recent bottom. So. Lots of opportunities there, and so once again, that's kind of why it pays off big time to be a investor, because ultimately, people say investing is risky, but if you understand how the money system works, once again, the government prints money, that money ends up into assets, and so at the end of the day, as long as you're picking quality assets that are in one case, either scarce or desirable, like Bitcoin or gold. Long term, they are going to go up. Real estate's going to go up. Stocks are a little more tricky because if the company isn't growing, they're not necessarily going to go up. But if you pick some good growth stocks, you'll be fine. So that's kind of where we were at. I want to touch really quick on the news that broke yesterday afternoon, actually. So Moody's did downgrade the United States credit, meaning that it is no longer I guess a triple A plus or AA plus credit rating, which means that the world is continuing to see us as more risky to borrow money from. And so, really quick, what this means is as the government prints more debt, like we continue to talk about, they sell it off via bonds. Typically, bonds are held by foreigners. Which is really important to understand too, meaning that as we continue to go further in debt, foreigners own more of us, basically more of America. And foreigners own a big chunk of America already. You're talking tens of trillions of dollars. And, as we get downgraded, there's many problems that happen here, but all of a sudden, if you're not necessarily the highest credit rating, people might go and buy bonds or buy debt from other places. And where this is going to get super interesting this year, the United States has to refinance at least $7 trillion of debt. If you look at the current interest rates, they are considered high, close to 4.5%, 5%, depending on which one you look at, which is much higher than what they were financed at years ago when interest rates were borderline zero. You know. So whenever you're in a predicament like this, the government has to give out new loans for new debt that needs reserviced, and so that goes to this auction. And typically, foreign nations like Japan, like China, buy American debt because we run what's called a trade deficit with them, meaning that we buy more from China than they buy from us, and same with Japan, so they take their leftover money and they buy these bonds. What happened in the last few weeks through this trade war is that China started selling American debt, and Japan just threatened to sell all of their American debt if we don't if we try and push them too hard with this trade war stuff. So the situation the United States is in is you got your two biggest buyers who are basically turning away from you. They don't want to buy more debt while we are refinancing record levels of debt, which basically puts us in a scenario that is highly likely, in my opinion, that the government's going to auction off these bonds and nobody is going to buy them. And so what happens when nobody buys bonds? They have to raise the interest rate to get the bonds sold because they need the money. And so many people I've heard are expecting the outcome of this credit agency downgrade to push interest rates from where they are now to 4.5%, 5% up to the 6 to 7% range. And so the implications of this is staggering. Obviously, higher interest rates means that we're paying more of our production, more of our GDP, what it's called, goes towards servicing the debt, which is already going parabolic. Just search for charts of United States interest payment on debt. It's going parabolic. And if these interest rates go up, that's going to only increase. And, what makes it even worse, once again, is that Americans, the consumers, are particularly in debt themselves. So this wouldn't be as bad a scenario. This happened to Japan decades ago. And what was interesting is Japan had a national savings rate, I think, of around 25%. So the citizens are actually able to buy the bonds themselves, which actually isn't a horrible position to be in if your own citizens own the debt. Government's paying the debt interest to the citizens. But in America's scenario, I think that, I think our savings rate or something like that is around $3 trillion maybe. So that's the amount of money that we could potentially buy bonds with. In other words, meaning that Americans don't have enough money to buy the debt if they wanted to. And so it puts us in this really interesting predicament of, okay, we need to print more money, and nobody wants to buy the debt. So now what happens? Probably the government ends up buying a bunch of the debt, and so I think we're coming to this scenario where, in my opinion, we are at the end of the road. I think things are lining up perfectly for a pretty disgusting outcome of this all. A lot of people ignore this stuff, thinking that the laws of physics don't apply to monetary policy for some reason, but When you dive deep into the details, America is way too deep in debt to ever repay it. The consumer is loaded with debt. I just actually spent some time comparing the United States to Dubai and how we handle debt, and it's really interesting actually. In Dubai, their debt is much lower, not only nationally but also individually. They say debt is pretty much only used by wealthy people to finance luxury purchases. Poor people don't take on debt because over there, the law is if you don't repay your debt, you go to jail, kind of like in scripture. It used to be in a lot of places anyway. And so that kind of discourages people from taking on risky loans. And, they also they don't have to finance necessities, meaning that their health care is universally covered and their college loans are universally covered, which are two major expenses that Americans have, which you could argue is a necessity. So the truth is, Americans are boat loaded in debt. I think the number is, let me just look here because I think I have it still pulled up. I want to say somewhere around $11 trillion is what the United States has in consumer debt, maybe. Sorry, no, 17.5 trillion is the consumer debt of the United States. So, yeah, try to fathom that number in your head, and sorry, my dog's going crazy. Try and fathom that number in your head, and it shouldn't be that difficult to draw the conclusion that America has no way out of this. And that's why a bunch of us have decided to buy Bitcoin or buy gold because we understand the writing on the wall. To us, it's very clear. We're not just crazy people after all, perhaps, but the majority of people are going to go on like nothing's wrong. I'd say 99% will continue doing their financial advisor suggested portfolio of the 60/40, which makes no sense. By the way, I think the 60/40 had its worst performing year, possibly ever last year. I think it did horrible. Mainly because, once again, bond values went down because the interest rates are rising. So, one final tack to throw in this here before I go to Naftali, but what should you expect from all this? I would say that interest rates are not going down anytime soon. They're probably going to go up. I think interest rates go up, meaning that, once again, mortgage rates go up, meaning that fewer houses are going to sell. I don't think real estate prices will go down, though. It's just going to become a luxury item. Housing is becoming a luxury for those who can afford to pay the high interest rates or for those that have cash. And, we really, in a lot of essences, I think this economy is built on debt. It is built on debt, and we rely on low rates. And I don't think that we're in a scenario where we can get to low rates, and I think that's going to be a massive pain point. So I would expect the outcome of all this is to be higher interest rates, and I don't foresee, those numbers coming down. So that's my input. Naftali, welcome on. We'll love to hear your thoughts on anything I just talked about, or if you have a different topic, we can certainly dive into it.
Well, I think the topic you're talking about is really important. I would say most people don't know what's going on because the system has blinded them. I recently read an article about a firm in credit on food and certain food chains and restaurant stores and companies are going with credit for food, grocery stores, because I think things are getting so expensive that they don't want to feel it and they want to buy food on credit. Now, the area we live in is very blessed, Western Pennsylvania. The wealthy don't even flash their wealth. I mean, there's very extremely wealthy people out here living in a 3-bedroom, single home family. People, not driving Ferraris, Lambos. I rarely see a sports car, or I rarely see a car over 100,000 locally. And I think it's because the people are frugal and wise, but I think a lot of other areas are really going to feel this. I think the rest of Pennsylvania, probably about, I would say, 60% to 75% of Pennsylvania is going to feel this ridiculously hard, especially the east coast of Pennsylvania. But aside from that, what you're talking about, first question I'm going to ask you, Ryan, I'll rattle off a couple questions, and, if you can remember them. first action. This is not financial advice, but you came in blazing with the military and the spending of the government. Now, sometimes I think the liberals make more personal decisions where a lot of the conservatives do not do that. I think everything is intentional. Almost every conservative family leaves 10 times richer than when they first came into office. It's just natural. It's just because what laws you make, you help the wealthy. Now, I'm for wealth, you know. I'm for getting wealthy. I'm very pro-wealthy. I'm conservative. My belief system is conservative. I don't like the full money thing. I believe in it because I believe, you know, you're a billionaire. You're going to be a billionaire. I'm going to be a billionaire. I strongly believe that. But at the same time, every action, this is the question, every action has the reaction. What are the Republicans doing right now in office to have a reaction in 5 years? They're not going to, screw themselves. They're not here just to destroy all their people. They have a mindset of looking at opportunity. So that's the first question. What's the action that they're doing right now that's going to cause the reaction? What do you see what they're doing right now? Because they think about everything. These are lawyers. These are very wealthy people. These are businessmen. Every action has a reaction. So what are the Republicans doing right now? Again, I'm conservative. We'll just say I'm Republican. But what are they doing right now that's going to cause wealth in a year, 2 years, 4 years? And then you said about the law of physics, everything has a law. So every action has a reaction. What are they going to be invested in? And then how do we leverage debt? Because I think soon it's going to be hard. They're going to throw debt at everybody before this crashes to give everybody an opportunity to really maybe take back real estate to really hurt, I think, the middle class and the lower middle class. How would we leverage debt? So that's the third question. And then the fourth question, how long do we have and what should we do? And then the fifth question is targeting luxury. That's how you ended it. You said real estate is going to be for the extreme wealthy. That's two things every real estate mogul has been talking about. Most of them say invest in Bitcoin, and then the 10% who say don't invest in Bitcoin are invested in Bitcoin. And then I would say about 70% of them say don't invest in real estate, but they all are just buying up, whether it's commercial, resident houses, they're buying $100,000 houses, and they're buying $50 million houses, and they're buying $50 million skyscrapers. Like, what is going on with the extreme wealthy that they're purchasing this, and they're either encouraging you or discouraging you both for crypto and real estate? And they have that, and it's almost, for some of them it's very encouraging, and for some of them it's hypocritical. So those are the questions I have for you, Ryan.
Yeah, man, good thoughts. Good questions. Trying to see if I can remember these. So number one, what are the Republicans doing? The only thing I really noticed in the news, I don't follow the stuff too closely. It seems like the Speaker of the House, whatever his name is, Johnson, does not want to vote on this new spending bill. I'm not entirely sure why. And so it seems like there's some kind of standoff stuff there. I will say I kind of follow the Trump family, and I do think that they are positioning themselves to be very wealthy, to get very wealthy. And I can't honestly say I blame them. I think it's just the reality. I mean, if I was Trump's kids, I would be doing the same thing. If you follow them, they're very heavy in crypto, and they're very heavily investing in like the Middle East area there, like the Saudi Arabia stuff. Something that just happened, I think, this week too. Trump literally took a personal gift from, I think it was Saudi Arabia or the UAE, some nation over there. He took like a personalized airplane worth, obnoxious amount of money, and I think that was really I don't know if you want to say heartbreaking thing to do. It's kind of fascinating that he would do such a thing, because he's going to get hammered for it. But I mean, it's hard to make an argument for that kind of stuff. And so I think looking at the Trump family, I think they're going to come out of this very wealthy. I think they went out fighting for what they call Main Street as opposed to Wall Street. Do they actually continue fighting for Wall or Main Street? I think to a certain degree, and I think that what they're actually going to fight for is the ability for young people who are smart to actually become wealthy via, cryptocurrency, via investing, via leveraging. I would say taking risks like they do, their family is very risk heavy, and so I think as far as the average working person, it doesn't appear that there's enough power right now to eliminate the income tax like they've been talking about. Interestingly enough, they have pivoted. The Republican Party has pivoted to taxing the rich at a higher percent rate, which I think is very interesting. So I think all this stuff, I think it's kind of mixed. I do think that Republicans, they are going to get wealthy out of it. And so I think if you study what they're doing, I think you can follow their playbook. Obviously, they're pushing hard for crypto, and I would say crypto is the number one space that you probably should be in if you're looking to gain some wealth because I think the Trump family is buying a crypto exchange, which it's crazy stuff right now. But they're deep into it. They're tweeting about buying stuff. So, if Eric Trump tweets about buying Ethereum, it's probably not a bad idea to buy Ethereum. If Trump tweets about the stocks going to rip, you should probably buy some stocks because he knows more than we do. So, that's a good question. Trying to think of what other ones you had. I know you said about how long that we have. I think that, I think it's gonna be, I think it's gonna be painfully. I think it's gonna be painful at a slower rate than most people realize, unless you're looking at the details. And I think that we already see that happening. Me and you and people who are paying attention. More people are waking up. But I think the average person who's making maybe a decent salary or who's living on retirement or who has a decent retirement, they're going to be slower to come to the conclusion. They're going to be in an oblivious world that everything's fine, that people are just complaining too much because their mortgage is either paid off or it's fixed. And so their monthly expenses are going to go up, but not as much as they probably realize. Maybe the price at the pump goes down for them. So. But meanwhile, I do think, like you said, grocery prices will probably be on the upward trend. Real estate's going to be unaffordable for people. So I would say we're looking in a ballpark of in 2 years. I think in 2 years, especially in rural Pennsylvania like we live, I think real estate prices continue to go up. I think that they are some of the prices that people are listing and how quick they're selling to me is fascinating. So I think if you're a young person, there are some good options, and I think that you have to start cutting down your wish list and looking at, okay, I can afford this property. It's not what I want, but I can make it good. Like I can put some work into it, because that's all you're going to be able to afford. I mean, the house that's in the country with a nice view that has a little bit of land. One of those just sold by my house, and it's 1,500 square foot. That should have went for around 150 to 175. I think it sold for 300, and most people won't be able to afford 300K around here, even if both parents are working. You're looking at probably 60 to 70 grand combined income. So $300,000 mortgage. Good luck getting a $60,000 down payment and then affording the monthly payment. So yeah, so that's where I see. I'd say 2 years. Within 2 years, things get kind of crazy. What were the other questions you had off? I kind of forgot about them since I spelled on those two things.
You answered, I think, 4 of them. I think the last one was about luxury. You mentioned about real estate becoming a luxury. So I'm going to rephrase the question, or maybe go in a different direction with it. How or what or who can we invest in, or what kind of businesses should we access that are luxury? Of course, real estate, and what other. Let me say this: we have to start thinking about businesses that make money with the wealthy, because if the middle class and the lower middle class and the poor can't afford it, what kind of businesses can we get in that's, I want to use the word luxury, anything associated with luxury? What are the businesses a young person should get? That's the first one, and then I'm going to ask you the second one. But that was the fifth question, and then the last question is, and a new question is, I'm 18 and 19. I just graduated high school. I have absolutely no opportunities out there. I might go work. I might go to college, or let's say I don't want to go to college, and I go work a part-time job, and I want to, and I hear everybody talking about the craziness that's about to happen. What options do I have, and what should I do by starting investing in crypto or investing? I mean, personally, I think the stock market is the Wild West now. There's not too many companies, unless you can go with Tesla, SpaceX, certain tech companies. But for the most part, most mainstream Fortune 500 companies, I don't even think they really fully understand what's going on. So if I'm a young person, how do I invest? That's the second question. The first question, which is the last, luxury. How do I how do I sell to the rich, and how do I sell luxury?
Yeah, good stuff. I think there's a great opportunity for that. I think experiences are going to be where you want to focus at for that. I'm a big believer in Airbnb, and so what I'm noticing, if you look around our area, if you can get a tiny house, tiny cabin on top of a mountain with a nice view or something like that, some of these places are renting for $1,000 a night locally in the area. And you look at how much it costs to build something like that. It's not that expensive, really, compared to what you're gonna make. I mean, if you're doing $1,000 a night, but there's more and more of these places popping up because I think the wealthy people are interested. They don't want to stay at a hotel, and that's a great opportunity there. Figure out how to host them. Another opportunity I would say is high end. Food, cooking, luxury food. I think that people are searching for either high quality ingredients, high quality foods. I think even bakeries that are doing more high quality stuff are doing well. I would say are doing better than those who are kind of not, they're going for more budget friendly options. And so we know a local baker, she opened up a storefront, and she said it doesn't really do well. It might break even, but she said where her big cash cow is doing catering stuff for weddings, and so she said that's where she makes all her money at. And so obviously weddings, if you're having a wedding, this is actually a good opportunity because rich people spend out the wazoo because it's all about being better than the last. People who are young also spend out the wazoo because they borrow money. I think you're going to see less of that, but I think that for a large portion of the population, I think that we continue to see anything related to wedding expenses continuing to increase, and I think that's where you can really grab people. And so if you make a really, really good cookie, I think you could charge $3 a cookie. And that's crazy margin, but you know what? If you go to like a Insomnia cookie or something, they're charging $4, and it's not even that good or healthy of a cookie. So if you can custom make 300 cookies, charge $1,000 to deliver it. I don't know how long it would take you to make that many cookies or how much you'd have into it, but I imagine you could probably make I'd say you could make at least half of that back, $500 a day. And you could probably charge more than that too. That's just an idea, but I'm sure people get more than that per cookie if you make it look nice. And so we obviously are. My in-law owns a high-end pretzel company, and we're gonna try and look into pushing into that space a bit more. How can we get people that are gonna have weddings to buy a package? I think that's a great opportunity there. So there's two areas there, more experience-based. I would say those are really good options. And then once again, like I said, high-end food. Um, if you're going to open a restaurant, don't try and appease the main population. Make it super, I would say, super high-end, charge really high prices. Hopefully people buy a glass of wine or something. But, if you're going to be a restaurant owner. There's a restaurant in Donegal called, I think, Out of the Fire. And it's very pricey. It's very high end, but that place is busy. And most people can't afford it, but it's busy. And they probably make a killing versus most of the local restaurants. If you're charging $15 or less a plate or $20 a plate, The margins aren't there. I think most of those restaurants end up failing because I think the middle class, once again, they're going to get squeezed out. They're not going to go out to eat. They're going to be forced to stop going out to eat. We're already seeing alcohol consumption decrease, which in my opinion is great, but it's a sign that people are starting to cut back. So those are three areas I would look into. Anything, once again, experience based. So if you if you live in the rural area, buy 20 acres of land and put in some food plots and charge people $10,000 to come hunt for a week, give them a little guided hunt. I think people will be willing to pay those prices if you have some good deer population too. So you just gotta get creative with it, but definitely keep the luxury consumer in mind. So for the young person who's graduating today, my biggest advice would be to skip college. I just put out a video. If you're interested, go to my YouTube page or my X page and watch it. I basically figured out that 50% of college grads are either unemployed or underemployed. And if you're underemployed, it means you're working at a job that doesn't require a college degree. And so the truth is, if you skip college and you go straight to the workforce, the 4 years that you would have spent at college, you'll learn more skills working than you will at college. You'll be more valuable to employers because I think experience is more valuable to employers than college education is currently, and it will continue to go that way. And so, depending on what you want to do, I would be looking to build some kind of social media platform. If you're gifted in speaking, if you're gifted with words, or if you're gifted in editing video, find somebody that is gifted with words and speaking, and maybe try and build their platform. But I think there's incredible opportunity there, and you should be doing that while you're working another job. So don't make it a full-time job trying to grow on YouTube or X unless you're able to. But for most people, you're going to be probably living with your parents or somewhere cheap, and you're going to be working a job, and then you're going to be putting in a couple hours on the side to try and grow your online presence. Another advice would be to figure out skills that are in high demand. So once again, anything carpentry, plumbing, stuff like that. If you're willing to put roofs on houses, I think you can make enough money in the summer that'll easily take care of you all year. There's just not many people doing it, and so it's not a very difficult task as far as understanding how to do stuff. It's just a matter of people don't really want to do it. So and then finally start thinking about AI, learn about AI, and really kind of figure out what jobs AI is going to replace, because it's coming very quick. And I think a lot of customer support roles are going to go to the wayside. Technology jobs will go to the wayside. So keep that in mind. I would say, look at look at starting a hustle or creating a business, because you can work for another company, but I think that the big companies are all about making money, and so if AI can do a job better than you, they're going to cut you, and I think a lot of people are going to find that the hard way. So I think we're moving in an economy to small business, small shops, small scale operations are going to be very, very much the way to go. So figure out something that you enjoy and try to start a little business up and grow. Grow on the side. I think you'll be able to work, whether you're making food at a fast food restaurant or at a gas station, or if you find a better paying job, maybe an assembly line or at a factory. But, those jobs are hard to come by, and they might not be ideal, but I would definitely try to make some money, put what you can into investment, whether it's crypto, whether it's stocks. I would avoid traditional means and try and make that money start to snowball. So yeah, those are my advice to young people. I think that for a young person coming out of high school, it's an exciting time because if you have the right mindset, I think that you're really poised to succeed. I think most kids are going to fail, sadly, because they've been brainwashed and they're going to pursue something that's not going to need or be in demand. But if you're young and, if you start building a platform, if you start building a business, I think you look back in 2 years, 4 years, and you'll be surprised where you're at compared to your peers graduating college. And they're not going to be able to find a job. So that's kind of where I think That's kind of what I think anyway. Naftali, I guess. What's I mean, we talked about this a couple times before, and I know we know how you feel about it too. But you're obviously you're going to be having a training camp for people, teaching them digital skills, and so I kind of wanted to touch on you. What is your vision, overall goal of doing this free camp for people to come and learn these up and coming modern day skills related to a variety of things. Why don't you share what you're hoping to see come out of that, because I think that's a good segue, since we're talking about young people who might be looking for what to do with their future.
Well, I think it's an opportunity. I think for me, doing the music part on Mondays and then doing just soundboard and podcasting and video and just learning the basics. I think it's maybe coming across to younger people or older people, because it's 12 and older. So there's somebody that's 50 years old that wants to learn this. I don't think it's too late. I don't think that you're either too young or too old to learn. And I think if somebody learns sound really good, because AI is I don't think can ever replace that, because there are mic systems that could do that to calibrate speakers and stuff, but I think you're gonna need a person 100% to know the frequency in the room, unless there's a robot in the room, and even then they're gonna just go off stats and analytics, and they can read the room and analytically wrong, and maybe there's a weird bass frequency in the corner that only humans can hear, and so I think that kind of skill is going to go up. I think media skills, audio skills are going to go up. AI is going to do a lot of like the podcasting and some of the easier stuff, and even maybe some parts of movies. But I think right now Hollywood is in danger because of YouTube. YouTube and Amazon. Amazon's buying. The thing about Amazon is smart. It's coming across as came across as like a media platform like YouTube, and it's buying all these companies. And if Disney ever went out of business, I think they'd go after Disney too. So I think they own like 4 or 5 companies. They bought MGM. They bought, I think, a couple other companies, major companies they bought that are Hollywood companies, and those are no longer in Hollywood. It's in the Amazon ecosystem. And so the world is really changing as we know it. And tomorrow those, YouTube and Amazon could go out of business, and it could be Rumble tomorrow. And I think that kind of platform is really something we need to get into as creatives, as young people and older people. I think we have to look at the world very differently. There's that. And then I think there's also social. I think this is going to help with social. So whether you're learning to do a podcast, and then there's always going to be a different audience. Like I don't think you'd be maybe in 40 years that generation, or 30 years that generation would be just one programmed kind of robotic system. But I think right now, for probably the next 10 to 20 years, it's going to be you're going to have social media, and then you're going to have the media, because the media's just changed. And so the Hollywood lawyers are leaving, and they don't have jobs, and that ecosystem is going to come to X and Facebook and YouTube, and they're going to start bringing. They're the gatekeepers, and not the gatekeepers in the sense of the businessmen, because I think those guys have lost a lot of their influence, and I think the gatekeepers are coming in a different sense and more of the lore. In the law, so they're gonna come and they're gonna start suing people. They're gonna go to artists and they're gonna be like, hey, they're gonna go to Tucker Carlson on X and say, hey, this guy on X used your video, let's sue him. And he's like, I don't want to sue him, but if you don't, this other person might sue you. So they're already coming. Disney, that Disney guy, they came after YouTube, and so I think we're gonna see a lot of that. It's gonna be like the Wild West for the next couple of years. And with the training we are doing, I think, especially in the media stuff, I think let us be on target, because we've been so behind, and then we run into a stereotype cliche. We only do one type of content as Christians, and I think if we open it and be experimental and start doing more business stuff, as you are, and start doing the music industry, and maybe not just I'm not talking about worship music. I'm not talking about Christian podcasts. there's 1,000, there's 100,000 voices out there. That's so stereotype cliche. I think using these skills and then bringing your own skills on that subject, and as a Christian, using your own the gifts and desires to fulfill that, and not fall into the stereotype of what everybody else is doing. And I think everybody follows trends, and the positive about the influence, they don't have, especially a lot of the Christian influencers, they'll follow the trend. If it's tomorrow, if the podcast guys are interviewing worship leaders, and they're like, oh, it's all about the presence, all about the worship leaders, and tomorrow Screamo and death metal came out, and that's the top music in the world, they're going to interview them. They're not going to go after the worship leaders no more. They're going to go after the death metal Screamo, because it's paying the bills. It's going to pay the bills. So I think creating a place and a platform that's indestructible, in the sense of like, hey, if YouTube or X or Rumble ever shut down, you have those followers, you have those systems, you build the system, you build the kingdom. And I think it's building that database. And so that's kind of the goal, is to get the future worship leaders, get the future podcasters, whether they 12 or whether they're 50 years old. I think there's an opportunity for us to really go at this and start looking through different lenses of how we're going to impact the next 5 to 10 years. Because right now, you can drop a video on X, or drop a video on Facebook, and it reach a certain paradigm more in an intimate way. You can drop a video on YouTube or Rumble or these media platforms, and it hit a different way, because most of them watching on TV. You know what I'm saying? Most people's not gonna necessarily look at media. Watch, some younger kids might watch on their telephone, but most people over, I would say 25 and to 100 are gonna watch on a television. They're not gonna go on Facebook or X on their television. They're going to go to a Rumble or a YouTube or a Hulu. They're going to go to some type of media platform, or Amazon. And then most people on their phones are going to go to an X and Instagram. So understanding the system, and I think this is going to really teach people how to have influence, and not just look at it as a platform. Oh, I'm on X, I'm on YouTube. Think of it as a business. This is a business, and we're not just doing it for money. And if it's in ministry, we're doing this out of a way to reach the lost. This is targeted audience. This is how we're going to reach the lost. And if you think of it, the cliche Christian stereotype, and do it that way, I think you're only going to reach Christians, and you're not going to have much influence. You're only going to have influence in the Christian community. So I think, and don't get me wrong, there will be that one atheist, or you will hear testimonies. Oh, we're reaching. I mean, if you have 100 million Christians following you, and you're going to reach bystanders, you're going to get strays that come by accident or by God's grace, but I think if you target and you just go after the system and build the system, I think it's a great opportunity to figure out how to do this in a different way. That's not the stereotype, cliche type of way of really reaching the lost. So that's the goal of this 5-week training with the kids. You know, maybe one person gets influenced, maybe, and I believe one person will get influenced, or maybe 100 might get influenced. I don't know, but I do know that that's kind of, the goal of this training.
Yeah, man. Amen. Good stuff. Definitely looking forward to that. I agree with what you're saying. I think that's vital skills to have, to learn, and I think that there's going to be a lot of media companies that come out of this kind of stuff, and that's the direction that we have to head, because I think the truth is less and less people, young people, are going to church. That's just a fact, but I think more and more young people are willing to watch a reel, or watch a short video, or watch something where the gospel is shared, via X or YouTube, then they are going to stumble into a church. And so that's an opportunity to plant seeds, to share the gospel to people. And I think that's the way that we need to focus. And so I'm 100% on board with you there. But I'm going to go ahead and close up the show here. Had a great conversation. Appreciate your thoughts and inputs. I will say, I don't even know if I have any closing remarks, but yeah, once again, young people, we continue to give shout outs to you. We definitely feel for you if you live in the area and you're trying to get ahead if you're trying to make ends meet, if you're trying to afford a house. I just want to share this interesting stat because I dove deep into steel workers in Johnstown, and they actually used to be employed by Bethlehem Steel, which was I guess a massive company. I think they used to have the largest steel mill in the world, I believe. They also own the Johnstown facilities, but at its peak, Johnstown employed around, I think, 15,000 people. It was definitely over 10,000 steel workers. And, to me, that's hard to wrap my head around because, 10,000 people is like the population of the town I live in times like 5. And so it's not just, not just adults, but like everybody. And so, but nonetheless, I was able to determine that when you compare, sorry, somebody was trying to call me. When you compare the wages that steel workers were getting paid 40 years ago, the average wage translates to today's dollars, $41 an hour. So tell me where a person who graduates high school with no experience can go and earn $40 an hour working hard. The answer is nowhere. You might be able to get close to that in the trucking industry, but you still have to go pay for a CDL, and you're probably starting at closer to 30 an hour. And so that's the kind of wealth that we've given up in America because we decided to buy things cheaper, import things, and so today Johnstown employs around 350 steel workers. So the impact that's had on the community is mind-boggling. And so, once again, if you're a young person, that's kind of my whole argument and why I'm getting passionate about this topic. You want to talk about the American dream. In my opinion, it's dead because, once again, if a couple of generations ago you could go make $40 an hour out of high school, comfortably afford to raise a family on one income through hard work, those days are gone. I'm not sure where you can make that kind of money unless you're in a skilled trade. And so that's kind of our precedent, our argument. I know a lot of people who are skilled with college degrees work in customer service roles, and combined they're making less than a steel worker used to make with no education. So that's kind of the trajectory that America's headed on. I think things continue to get worse. I think wages continue to decline. Unless you're a high-end earner, then you'll probably get richer and richer. But for the rest of the population, I think it's just a downward spiral. So that's kind of what I wanted to close out on. There's hopefully going to be some kind of video and documentary regarding this stuff, but I just thought that was an interesting stat to share. So try and keep your head high. Definitely dive into the Word of God. Find some people to get plugged into with because, through the Lord all things are possible. And so, the emphasis is that there is no hope in America, in my opinion, looking at the numbers, the statistics, there is no hope. The only hope is in Jesus Christ, and so if you don't know Him, that's got to be your first decision. Once you're filled with the Holy Spirit, He will show you the path to take and the unique things to dive into. Otherwise, I think if you keep going by your own strength, you're only going to fail because things will continue to get worse, and the only hope, once again, is if we bootstrap it from the ground and we build our community strong and start looking out for each other. But anyway, Naftali, I'll give you the final word, and then we're closing out.
That was final word. Man, so thanks, bro. Great job, man.
All right. Thanks, brother. Take care. Have a blessed week, and we'll see you guys all later.
Same to you. Much love. Peace.